Okay, if you've been anywhere near the markets lately, you can feel it, right? That buzz around NVIDIA. It's electric. But there's a ton of noise out there, a lot of speculation. So you know what? Let's cut right through all of it. Let's figure out what's real and what's just rumor.
And look, the backdrop for all this chatter? It's huge. We're talking about February 6th, 2026, when the Dow Jones Industrial Average crossed 50,000 for the first time ever. I mean, what a truly historic milestone.
So who was one of the key players powering that massive historic climb? Yep, you already know, NVIDIA. The stock just went on an absolute tear. We're talking a jump of almost 8% in a single day. That poured gasoline on the rally, and, you guessed it, a whole new wave of speculation.
All right, so this all brings us to the big question, right? Their critical earnings call is coming up fast, February 25th. So what is actually going on here? What's fueling all this hype? And the most important question for us, how do we separate fact from fiction?
First up, let's dive right into what everyone's talking about, the rumors. Man, there are a couple of really big ones floating around that just refuse to go away.
So there are really two big theories dominating the conversation. The first one is that the stock is, quote, optically expensive. Basically, the share price just looks too high for everyday retail investors, and the thinking is it needs another split. The second big theory is that NVIDIA has to split so it doesn't mess up the Dow Jones Index. So let's take these on one by one.
Okay, so is the stock actually too expensive? Well, to figure that out, we only need to look back to June of 2024. Not that long ago at all. Back then, NVIDIA was trading at over $1,200 a share. Then, boom, they did a massive 10-for-1 split. That brought the price all the way down to a much friendlier $120.
And where is it today? Well, it's floating right around $185 a share. So when you compare that to the $1,200 price tag that triggered the last split, yeah, the whole "it's too expensive for retail investors" argument kind of falls apart.
And hey, just a quick refresher for anybody who's new to this. A stock split doesn't magically change a company's value. It's literally like taking a pizza and cutting it into more slices. You get more pieces, sure, but you still have the exact same amount of pizza. It's really just a psychological tool to make the price seem more accessible.
All right, so what about that second rumor? The whole idea that they have to split because of the Dow Jones Industrial Average. Well, the verdict on this one is, let's just say, pretty cut and dry.
Yeah, the facts just completely debunk this one. First off, NVIDIA is already in the Dow. They joined back in November 2024. And get this, out of the 30 companies in the index, they're ranked right in the middle at number 17. And because the Dow is price-weighted, their stock price, which is under $200, is actually below the average for the index. So they aren't skewing a thing. This whole theory is a total non-starter, dead on arrival.
Okay, so let's move on. The next big rumor swirling around is all about that cash. NVIDIA is just printing money right now, and the theory goes that they're about to unleash this huge, one-time special dividend for all their shareholders. And, you can totally see why people are talking about this. I mean, the company is sitting on a mind-boggling $60.6 billion in cash. That's not just a rainy day fund, that's a war chest. So the question is, why wouldn't they share some of that wealth?
Well, the answer is pretty simple, because the company has been incredibly clear about where its money is going. And this quote here from the CFO, Colette Kress, really says it all. She makes it plain that their number one focus is on their own internal needs. We're talking funding the supply chain, building capacity, prepping for the future.
So, the company's priorities? They couldn't be clearer. Priority 1, fuel internal growth. Specifically, pouring money into the full production of their next-generation Vera Rubin chip. Priority 2, give value back to shareholders. But, and this is key, through share buybacks, which are way more tax efficient. A special dividend? It's not even on the roadmap.
And honestly, you don't even need to listen to their words. Just look at the numbers. They have authorization to buy back $62.2 billion worth of their own stock, and their regular quarterly dividend? A penny. Just 1 cent per share. I mean, the company is screaming with its actions where its priorities lie. Reinvestment and buybacks. Period.
Okay, so if the real story isn't a stock split, and it's not about a special dividend, then what is it? What are the big Wall Street firms, the institutional investors, actually watching for on February 25th? Now, this is where things get really interesting.
It all comes down to this right here. Just look at this chart. The market isn't just expecting good results. It's expecting an absolute explosion.
The forecast for this quarter's revenue was more than $65 billion. That's not just a little bit better than last year, that is almost double. The pressure here is absolutely off the charts.
And let's be real, the company itself has been fanning these flames. The CEO, Jensen Huang, used the word insane to describe the demand for their new chips. He talked about how everybody wants them and everybody wants to be first. And that, right there, is the bull case in a nutshell. Demand that seems completely unstoppable.
But, and this is a huge but, here's the trap. The market has already baked all of that insane demand into the stock price. It is what we call priced for perfection. The big fear is something analysts call an air pocket. It's what happens when expectations are so incredibly high that even a fantastic report can feel like a disappointment. Because look, demand might feel infinite, but their supply definitely isn't. So the risk is, if NVIDIA comes out and reports numbers that are just great, traders might just sell the news and we could see a pretty nasty correction.
So, look, this is the main takeaway. Forget all the chatter on social media about splits and dividends. The real story, the high-stakes drama happening on February 25th, boils down to one simple and frankly kind of terrifying question. When the market has already priced you for absolute perfection, can you possibly find a way to be even better?
And that, right there, is the multi-trillion-dollar question. When your starting point, your baseline, is a historic, record-shattering quarter, what happens if the actual results are just great? I guess we're all going to find out very, very soon.